Okay, but here's the thing: what's going on now? You've got, let's say, 5, 10 companies, and they're all priced like they're going to win the whole market, but only one or two can win this. These winner take most markets. They can't all be right. So, yeah, you're right. We don't know which one's going to win, but it could be that none of them win.
Yeah.
Now, we've done this before, and you talked about it in the letter. We've looked at the capex that is going to be spent, and McKinsey, they say what, 7 billion,
7 trillion.
trillion. I'm trying to get my head
I
around
wish.
these numbers. Other people have said 5 trillion. Maybe with overspends, it's going to be 10 trillion. But let's
What's
just
a trillion between friends?
exactly.
Yeah.
But let's just start with 5 trillion, and let's just play with a few numbers here. So let's say you want a 20% return on capital. That's a good return on capital. That will keep things going. You need 1 trillion in EBIT. Now, that 5 trillion, it's going to depreciate in 5 years. So that's 1 trillion of depreciation every year. So you need 2 trillion now of EBITDA. Now, things are going well, so you're going to get 40% EBITDA margin. Okay, so you need 5 trillion of revenue. Here's the thing. That is equivalent to the world's total IT budget at the moment. So you have to double that budget. Now, that did not happen, between 97 and 2005. The world's IT budget did not double, despite how revolutionary that was. And simply, the world cannot afford to double its IT budget. Think about how many companies are out there on 10% margins. The vast majority of companies are not on 20, 30% margins. The vast majority of companies cannot afford to do this. So I don't see how that 5 trillion is really possible. But let's look at, let's say, okay, it's not that bad. Let's say it's only, 10%. They make their WACC, their return on capital equals their WACC. Well, actually, you know what? Then pricing is going to be competitive, so their EBITDA margins are going to be lower. Therefore, you're still going to need to make roughly the same amount of revenue. So either way, we are talking about an implausible amount of revenue. Not only that, but in order to generate 5 trillion of revenue, you have to save the customer or earn for the customer more. Well, okay, so you want to create 10 trillion of value?
I mean, you're being generous. I mean,
well, that's sort of half the GDP of China. Are you going to create that? What's more, if you do that through savings, well, guess what's going to happen? You're going to have a huge amount of unemployment, and that's going to reduce aggregate consumer demand. That was seen during the Industrial Revolution. Yes, long term it was fine, but you had what was actually called the Engels pause, as in Marx and Engels, and that was a period where aggregate demand did drop. And we look back on it and go, it was a short blip. Well, yeah, 10 years, 15, 20 years, that's actually quite a long time for an investor.
yeah.
So I just think this is almost implausible. If this happens, you will not see that level of spending. You are going to see very, very subpar returns for all these companies, huge amounts of capital written off, huge amount of price competition if it all gets built. And this could actually be negative for AI. Whilst the railroads and .com laying fiber, well, not .com, TMT, the telco bubble, that was actually very positive because a lot of railroads are still being used today. A lot, that fiber is still 50% underutilized, but it is still being used today. A data center built today will not be used 10 years from now. And if it is, it will be used for the most menial of activities. So because of that, if you have all these assets that just become wasted assets, you could stall AI development for quite some time if the bubble were to pop now. Now, I actually don't think that's the most likely scenario. I think the most likely scenario is at some point we say, actually, you know what, we're not going to be able to build all this because OpenAI are just in discussions with NVIDIA to guarantee their debt. NVIDIA are going to have to guarantee OpenAI's debt. this tells us so much about what's happening. It tells us that banks are not actually willing to lend to OpenAI without NVIDIA as a guarantor. So the financing for this is actually now starting to look pretty shaky, because we are financing 5 trillion is not an easy feat, let alone 7 or 10 trillion. So I don't think this is actually all going to get built. And then, if it's not built, then where's the growth coming from? You've got to admit that the growth isn't going to be what people think it is, and valuations reset. But valuations can still reset just because people realize this.